Hey everyone, it's Matt with followwallstreet.com. Thanks again for tuning in today. Today we're going to touch upon the performance of the communications sector. Then we're going to dive quickly into the entertainment industry, which is where entertainment industry charts, I should say. That's where Disney stock lives. And then we're going to finish this off with a quick look at the Disney charts across multiple time frames. And again, if you're enjoying some of the content we're providing, please feel free to subscribe to the channel below. And also certainly head over to followwallstreet.com and sign up for that twice monthly sector performance newsletter. I think you'll find it immensely helpful to help you focus on the sectors that you should be looking into. You're going to be watching where Wall Street's rotating their money so you can avoid stocks like Disney, for example, for now, that may not provide the best long opportunities in the very moment. So yeah, head over there and sign up for that newsletter. A lot of our folks, our readers, love that thing. That gets put out on the 1st and 16th of the month. So again, on the charts here we have, our screen here, we have the charts for the S&P 500, which is in that top panel that you can see here. That's obviously since the start of 2022. You can see that the S&P has been in a downtrend. We all know that. It looks like it's trying to establish some type of basing pattern here in the last quarter of the year, and certainly given the seasonality, don't be surprised to see it kind of spike up and try to reach around the 4,000 mark in the S&P 500. But on the middle panel here, we've got the communication services sector performance. And this is one of the things you'll be getting twice monthly, is showing you where the performance is and where the Wall Street money is rotating in comparison to the S&P 500, which will give you a great focus or give you some ability to focus on what industries and stocks you should be looking at. And what you'll see is here, obviously, through the year of 2022 and even 2021, since April of 2021, the communication services sector has been in a downtrend. It hasn't yet pierced this downtrending line all through 2022. If we draw another downtrend line here that connects this peak and this peak, you might hit, again this peak possibly. But anyway, you really need to see a move to the upside above this downtrending line with conviction to begin seeing a turnaround in the stocks within the communication services sector. And if we look at where Disney lives, they live inside the entertainment industry. Back in 2021, 2022, we had an attempt of the entertainment industry, which includes big name stocks like Disney, trying to kind of base along this uptrending pattern here, this uptrending line. It broke that in March of 2022, and it's been just nothing but falling almost precipitously since that point. And as kind of one of the things that we're looking at that's really a kind of telltale sign for where this might be headed for now is that we don't yet have a kind of a higher low here on the performance of the entertainment industry. And that's really a warning sign for us. It looks like it might be trying to form some type of a falling wedge, which could be seen as bullish, but for now we're just going to be watching this. We want to see a break above that, possibly a pullback to that downtrending line, and that will tell us that some of the stocks in the entertainment industry are starting to head higher. So here on the screen you've got a few different time frames, monthly, weekly, and daily charts for Walt Disney, stock ticker DIS. I like to look at the monthly charts first because it really kind of helps me step back and see what we're doing here. And as you can see, is over a month-over-month basis, we may be trying to attempt to make a triple bottom, a kind of a 3 times test of this $80 to $85 a share range. Back in February of 2016, it tested that range. Back in 2020, we tested that range. And then also, don't be surprised to see it happen again here in maybe the first quarter of 2023, that we come back down and test this $80 to $85 a share point on a month-over-month basis. And if we look at the weekly charts, you can also see it's something that may be just worth avoiding for now, because you can see week over week it has been in a downtrend. But we are starting to form, or it appears to be, some type of maybe intermediate base. Charting is subjective. We certainly could say that it might be making a triple bottom here and then head higher. But for now, we're just going to be watching this very carefully and seeing what happens through Q4 of 2022 and into 2023. And also you can see that's trying to possibly make a triple base on the daily here as well. So don't be surprised and shocked if it comes back down and tests this $90 a share range. Just be wary of the fact that it may need some time to head back up, or it might be heading lower to $80 or $85 a share. So keep this on your watch list for now. Do observe it. If you're going to go long on it, I would certainly think before you act. But do be careful out there. Happy trading, and All the best.